We have come forward to learn something new, and it is the first step towards progress, towards learning. Like there's a wisdom said by the great father of USA, uh, Benjamin Franklin, who has said, "An investment in knowledge pays the best interest." And I can see my dear friends has put their investment in the knowledge, and I'm glad to witness and be part of it. Okay, so as a co-leader, I humbly request everybody to please come forward to share their learnings as a speaker, and not only as a speaker, but also it is a happy moment to share that coming forward will be sharing the NPAF insights on a monthly basis and also quarterly newsletter coming forward. So I humbly request each of you to please help our vision of NPAF research and subcommittee to share knowledge, and through the practical knowledge sharing only we grow together. And before that, I would like to thank media subcommittee for their huge effort to make the flyers, and all other committee members as well. So without any further ado, I would like to welcome and hand over the stage to our very energetic CA, who is also a member of our Education and Research Subcommittee. Please help me welcome CA Rajesh Raut. Rajesh, the stage is yours.
Thank you, Lakshman, for giving me the opportunity. Let's start the session. Good evening, everyone. I want to welcome each and every member. I want to welcome each and every member to this session. Today's session will be based on the corporate tax filing in the compliance session. First, I want to introduce myself. My name is Rajesh Rao. I'm by profession. I am also a chartered accountant, and I am the one of the member of a subcommittee, education and research subcommittee. For this opportunity, first of all, I want to thank all the subcommittee, education and subcommittee members for me to give this opportunity to run this show, to run this important show. Uh, Basically, I want to thank Lakshman Kariki, Yajan Basia, and my dear brother Bijay Tiwari for encouraging me to moderate this show, and I am really happy. Yeah, I know this is my first webinar as a moderator. I am handling the first as a moderator. There will be mistakes, some mistakes. I hope everyone will accept this and take it easily. Uh, take it easily. As we, as we all know that in UAE, corporate tax is applicable from June 2023. And the corporate tax filing, this next due date for the corporate tax filing is uh, September 30 September, and we are really excited to learn about this. What we have to take care, what things we have to take care while filing a corporate tax return. Today in this session, our brothers Bijay Tiwari will guide on us through this session. Um, so I will not take up more time, and I will and would like to call my respected brother and our vice chairperson, C. Santosh Khanal, to officially start this today webinar. Uh, the stage is yours, and I want to hand over this mic to our vice chair, our chairperson, Santosh Khanal.
Thank you very much, Rajesh. Even if vice or the main one, it doesn't matter. It's all about the fraternity, and I'm so glad to be a part of it. Dear Vice Chairperson Diwakarji, I can see him on the floor. My Secretary Rupeshji, Treasurer Pradeepji, and my ExCom members. and my very dear subcommittee members, education and research subcommittee members. I'd like to, and all other members of NPAF, I'd like to welcome you all to this webinar session. And I'd like to thank you all for taking your time to join this and be a part of this learning process. As we all know, the topic for the evening is corporate tax filing and the related compliance essentials. We all know the importance of this, and I know that most of us have already been a part of these filings, and we have had our share of experiences. I believe as much as important the initiatives taken by the subcommittee is, the timing of taking those initiatives is more important than that. And I'd like to thank the subcommittee to place this session in this particular time of the hour, as we are on the last day of August, and we are very close to the month of filing for most of the entities in the UAE. And I believe this could not have been a better timing than this, as like we all have some sort of experiences, and out of us, some of us are still to explore those. So sharing all those experiences, this platform, like nothing can be better than this platform. So thank you very much, subcommittee, for being careful in taking up the sessions. And I am aware of other initiatives that are down the lane and which are going to be like put across the table very soon. And I'd like to thank the subcommittee from the bottom of my heart on behalf of XCOM for this. Most importantly, I'd like to thank the speaker of the session today, Bijay ji. Bijay ji has been instrumental in this whole process, like not only in coordinating this subcommittee and also being a very important member of the XCOM. So Bijay ji's experience in the corporate tax filing shall be very helpful for all of us. I don't think I need to put any stress on the importance of the sessions like this. Webinar sessions, they have always been very important across the fraternity and across many organizations. And this sort of sessions have always been the foundation of this foundation of NPAF. And for building NPAF this way along, webinar sessions and this subcommittee has always been very instrumental. I would like to thank you all for continuing to building on this. And I can see a number of other friends who have joined this subcommittee very recently. So I'd like to welcome you all once again. And I and the XCOM would be looking forward to a lot of contributions from your end. Also, a big round of applause for the media subcommittee, who has been instrumental in rolling out the flyers and helping all of us, like explore, share and express all these things together. They have been instrumental in organizing this team session and helping us learn together as well. Without further ado, I'd like to pass back the digital mic to the moderator of the evening. Once again, I'd like to thank you all the members, for taking your time and attending this session. I would expect this to be very fruitful for all of us. Happy learning. Have a good evening.
Thank you, Santosh ji, for your kind word and for your words, really inspiring all of us to do this webinar, and we are really motivated with your words. And before introducing our speaker, am I audible, clearly audible now?
Yes, loud and clear.
Yeah. Before introducing to our speaker today, I want to say some few things which will be relevant to the today webinar. First point number one, our webinar will run approx for 60 to 90 minutes. Main session will be run to 60 to 90 minutes. And I would request everyone to mute their mic so that there will be no disturbance during the session, so that everyone will get the not get the distracted. And I also want to inform everyone that you can, if there is any question that you want to raise, you can type on a chat box, and you can personally message me through WhatsApp. We will gather all the queries and questions at the last of the session, and we will try to answer every queries at the last of the session. And another thing, the session will be recorded, and the whole session, 60-minute session, will be recorded, and it will be uploaded on our official YouTube channel, NPAF YouTube channel. And I also request everyone go and subscribe that channel, so that in future also we can get any update. If we subscribe that channel, we will get a notification, and we'll motivate to bring more and more content to upload on that channel.
Francis, you are on mute. You are on mute.
Now let's introduce our today's speaker, our dear brother CA Bijay Tiwari. He is really an inspiration to all of us. He is not only a chartered accountant, he is so kind to everyone, and he is one of the leader of the subcommittee, education and research subcommittee. As a profession, he is a chartered accountant from both ICI and ICANN. Uh, and currently he is also a coordinator of NPAF Education and Research Subcommittee. Talking about his personal experience, he he is a chartered accountant who is specialized in UAE Corporate Tax, VAT, and audit. Currently, he is a compliance and finance manager in a business consultancy firm, Seven Stock Consultancy, who is based in the UAE. I will not take more time. I would like to hand over the stage to our brother CA Bijay Tiwari to start the today's webinar. Once again, I want to thank everyone for being in today's webinar. Let's make this more fruitful, and I want to hand over mic to our today's speaker and respected brother CA Bijay Tiwari. Let's welcome to our brother Bijay Tiwari.
Thank you, Rajesh. Thank you for your kind introductions, and thank you all the members of Research and Education Subcommittee, and thank you our chairpersons, C. Santosh Khanna, and for your kind introduction as well. So yeah, so without further delay, so we can let's get started for the today's sessions. And I have also divided the today's sessions into three parts. The first part is compliance overview, that overall corporate tax.
Bijay brother, could you unmute, please?
Yes, today's webinar. So I have split on three parts. First part is overall corporate tax compliance overview. It will take around 8 to 10 minutes. Okay. And second part, compliance essentials of the corporate tax filing. So it will take around 10 to 12 minutes. And that last part is step-by-step filing process. So be patient. So it will take 15 to 20 minutes. We are discussing on the theory part. So then I move to the practical part. So yeah, I'm going to share that. So the first part, overall corporate tax compliance, overview of corporate tax compliance. So I'm going to share that. So is this visible?
Yes, it is.
Yeah. Yeah, it's a first part. So for today's webinar, so UAE corporate tax compliance overview. So I have mentioned that some reference of the provisions. Yeah. First one is Article 451, corporate tax registrations. before starting any filing and compliance, we have to first register in the portals. So who is required to register in portals? Certain exceptions are there. Certain government entities, government controlled entities, and extractive business and non-extractive major licenses are exempted on a certain exceptions, and they are exempted from the registrations on a certain exemptions only. So other than that, required to register in the corporate tax portal. So, and if they are delaying for the registrations, so there will be the fine of state over 10,000, and it's mandatory for all the entities except the 4 entities. And Article 53 and 54, tax periods and filing deadlines. Period is standards periods is 12 months, and we can it can vary from 6 to 18 months. So based on the registrations and the filing period. So deadlines, corporate tax deadlines is within 9 months from after the end of tax periods, and the filing is electronically. So there is no any manual filing. And Article 55, it's a tax payment. We have to pay the tax on or before the filing deadlines. And if there is a delay on payment, the tax, corporate tax, so there will be the interest of 1% per month or part thereof. And payment, there is no any advance payment concept in UAE as of now. So, and there is no any quarterly payment. So straight away, there is only a annual, like we have to pay on the from the annual tax returns. Article 56, record keeping requirements. So we have to maintain the books of accounts as per the UAE Corporate Tax law. We have to maintain for 7 years. So it includes financial statement, component of all the financial statements, and supporting documents like a contract, invoice, schedules, related disclosures, and other documentations. Article 34 to 36, the transfer pricing compliance. It is different, and it's that. Only that they have to maintain the books of account properly, who are dealing on a related parties and connected persons. So they have to maintain the proper books, and they have to deal on the arm's length basis. And if in case of threshold, if they cross the threshold like 200 millions, then they have separate compliance, and it is a separate part to like it's additional compliance they have to maintain in the books, and additional disclosures is required for the entities who is cross the threshold of transfer pricing. Qualifying region persons, they are if they are qualified, then they have to pay the 0% tax. They are not required to pay any tax in UAE. So only if they meet the criteria. So they have to maintain the debit options. There are lots of things to maintain, like assets, employees, dealing with the parties and all. So filing is required to all the fusion persons, even if they have 0 transactions for all the entities. And a small business relief who can adopt, whose turnover is less than 3 millions, up to 3 millions, whose turnover in a tax periods is up to 3 million. They can adopt this small business relief. This is the elections in the FTA portals. We have to elect these options. So if the turnover up to 3 millions, if turnover is exceeding 3 million, then we cannot have, we don't have any options to elect this. So then it goes to the non-SPS provisions. This is applicable only, available only till the end of 26. It's applicable up to 26. And after that, so as of now, there is no any notifications. So we have to wait for it. So this is also the very good, and we all our small business are getting relief from here. So they have no need to pay any tax, even if your profit is more than 375,000 and the turnover must be less up to 3 millions. This is the provision of MNEs, multi-enterprise, MNCs, multinational entities, and this provision is applicable only if your turnovers, global turnovers, applicable to the members of MNCs only. So whose members is in.
Sorry to interrupt. I think your slide is not moving. It's still showing small business relief.
No, we can see
I think
we can-
Article 41.
We can see.
Article 41 is displaying on screen.
Yeah, it's displaying as.
Okay. It's provision for the MNEs, multinational entities, and whose members is in UAE and have a global turnover of €350 millions, exceeding that, and or 3.1 billions. So the tax rate is applicable for the MNEs 15% if the turnovers exceed that limit. So, and yeah, additional disclosure is required for the entities which turnover exceed that 375 millions or 3.15 billions. This is the first part. I'm just covering the basic provisions before starting the filing or setting the process. So, and the second part, compliance essentials and related issues in the corporate tax filing. This is the second part. Compliance essentials and related issues are covered here. So this is very important because of I especially cover the major issues while filing the corporate tax returns. I've covered the major points here. So the first sections, first on stage, that is a taxpayer details. So it's a taxpayer details. One of first sections we can find taxpayer details. Here the major questions I've covered here. So is the taxable person's member of MNEs?
Excuse me, your screen is not being shared.
Sorry, is this visible?
Yeah.
Yes, now it is visible.
Yeah. Okay. Yeah, this is the second part. So I've covered the compliance essentials and the related issue while filing the corporate tax return. I've covered the major questions here. So so it will help you to file the returns properly if you understand all these points. On the first sections, it's a taxpayer details. It mentions everything, TRN numbers, company details, company names, and contact numbers and all. So, and other major questions also. I'd ask the other major questions. Like first questions, which is important on the first sections, that's taxpayer details. Is the
Hello.
taxable person a member of MNEs? So it asks because of if your turnover exceed these limits and you have to then
So log out गरेर login गर्ने हुन्छ.
hello.
It's
Hello.
all clear, Bijay. Go ahead.
Yeah.
Is there any issue?
No.
No issue. Please continue.
Okay.
No, there is no issue. You can continue, Bijay.
Yeah. And the second question is because of this, Aman is why it is asking. So the purpose is your turnover exceed that limit, you must comply. You have to pay the 15% of tax, and I require to disclose the additional requirement. So that's why this is asking. So, and the second question is the taxable person's tax resident is the taxable person tax resident in the foreign jurisdiction. This means if you are a resident of foreign jurisdiction, then you can get the tax credit. Can get the tax benefit if you have a TRC, tax resident certificate. So then you get the benefit of that. So then third question is the taxable person the future person making election to subject to the corporate tax and the standard tax rate regime. So because of the questions, why it is asking, so we have options to adopt that normal standard rate corporate tax. Even if you are free-zone persons, then you can adopt the provisions. So and then you can have a different provision, but you don't get any benefit of qualifying free-zone persons, 0% on the qualifying incomes and all. So there are some pros and cons, but because of that's why this is asking on the taxpayer details. Second section is elections. It asks certain accounting and transferring of all the assets. So first questions, which is important in this second section, is will the taxable persons like to elect to use a realization basis? So the realization basis is if you are record. Suppose if you adopt the, we generally apply the accrual concept, right? We generally apply the accrual concept, and it is mandated for all the entities, for all entities which turnover is exceeding 3 million. So, and less than 3 million, it is so optional. So, and if we use the accrual concept, and there might be booked some unrealized gain and loss also. So, the purpose is if you have record any unrealized gain or loss, you have the rights to exclude the calculating taxable income. So exclude from the while calculating taxable income. So that's why if you are adopting the realization basis or no, so that's why if you click yes, then you can exclude the unrealized gain or loss. If you click no, so then you can include on the you can cover the unrealized gain or loss here. Then the tax filing also. Did the taxable person transfer any assets or liability to member of same qualifying group? Yeah. So the purpose is if you are transferring in between the qualifying group, so there's exemptions of tax exemption of tax if you are transferring in between, and there is a threshold of 75%. So it must be held in between these members of the entities. So then only you get the benefit of tax, benefit of exemptions, tax exemptions. So the purpose is if you are transferring in between the members, then you'll get the benefit of tax exemptions, and both party transfer have to de-recognize and transfer recognize on a net value, net book value. So and there is no any profit and losses incorporated in the tax filing. So did the taxable persons transfer a business or individual part? Here is also the merger demergers, and if you transfer the part of whole or part of the business, then this is also applicable for the exemptions applicable for this business also. So and you'll get the benefit of tax exemptions. The same thing, and business restructuring that I already covered, merger, demerger, spin-off, and business transfers. In this case, if you transfer part or whole of the business, then you will have a benefit. So you can adopt, you can claim. There is no any taxability for the profit or loss, so you can get the benefit of. But the condition is, so both parties must be registered in the tax, and both must be registered. First of all, must be registered in tax. Section 3, accounting schedules. This covered profit and loss, statement of profit and loss, statement of other comprehensive incomes, and of statement of financial positions. This section 3 covered this three part. So the major questions, major issues in this section is fine and penalties. It is allowed for deduction or not? Fine and penalties only allowed if it is paid for the breach of contract or agreement, not for the breach of law. Law means if you are not complying the provisions, laws, then there is no any exemptions. You have to add back the cost if you add back the expenses if you are deducted from the profit and loss. So it is not allowed for deductions. And for the second point, entertainment expenses, there are certain exceptions on the deductions, and if it is paid for the employees' benefit, then 100% allowed. If it's paid for the customers, suppliers, and partners, and also there is certain exceptions, and only you get the benefit of 15%. So we'll allow for deductions 15%. And third, interest expenditure. If your interest is up to 12 million, then you can claim the 100%. But if your interest is more than 12 million, then there is a condition of 30%, subject to 30% of EBITDA. You can claim the benefits. Donations is only allowed for deductions if it is paid, contributed to the qualifying.
Just one question in regards of that salary. One of the company I audited, there was one portion of salary that was paid to this managing director, but it was not paid through WPS. So whether that hello, Bijay, am I able to hear you? Hello?
Yeah, actually, we have a question and answer sessions. Okay, we can cover there. Okay, you can just drop a message on our chat box.
Naveen bro, if you have any question, just drop a message on a question and answer chat box. We'll entertain your question on the last of the session. Because if we raise question in the middle of the session will be long. So we'll
no problem. I will raise at the last.
Yeah, sure. Thank you for understanding.
Okay.
Yeah, then the fourth one is donations. Donations only allowed if it is paid to qualifying public benefit, which is approved by the government, and that charities, trust, and all. So if it is approved, so if you get the license, approved license, then you'll get the benefit. Only if it is paid to qualified citizen persons. In other cases, there is no any deductions allowed. So dividend income is exempt generally. So in certain cases like participation interest, so there is certain exceptions that if your holding is less than 5%, and holding period is less than 12 months, and if that entity is from where we are getting the dividend, they are paying the tax less than or up to less than 9% corporate tax, then we don't get the benefit of exemptions. So in other cases, dividend is exempted for the individuals and general persons also. Section 4. Accounting adjustment and exempt incomes. And does taxable persons account for any investment on the equity methods? Equity methods means if you are investing somewhere and suppose I have also mentioned that I have also put the question examples also. So in case of Bijay Holding, and if I invest on the company and in the Tiwari LLC, so if there is a profit of 4 million, so that 25% of 4 millions, that 1 millions can be recorded in the books of Bijay Holding. So this is the equity method. So if you want to book this profit in the books of Bijay Holding, then you can adopt this provisions. So adopt this options. Otherwise, don't click on yes. And has the taxable persons recognized any realized? Has the taxable persons recognized any realized or unrealized gain or loss in this financial statement? It means that checking whether the taxable persons has recorded the gain or loss in the financial statement. It means not through the income statements, just through the OCI and the revaluation reserves. These are this point. It means that we have record the profits or incomes. So through the OCI or revaluation reserves. That's why it's asking the purpose is to mention this point also. Transition adjustment. This is the provisions is applicable for the first time. So if you are adopting, we are in the first filing. So before 2024, before the first filing period, if you have any immovable properties, so if you want to revalue, and if you want to revalue the assets and you are revalued already and you have a valuation reports, so you want to get the benefits of the market value. So suppose in 2020 you purchase 1 million, purchase at 1 million, and in 2024, beginning of the 2024, the value of the assets is 4 million. So 3 million is a notional gain. So if you properly valued as per the valuation reports, and if you disclose that on the FTA portal, so they consider 4 million as a cost as on first of financial year, first of the tax period, and then they calculate the profits accordingly. If you sell on 2025 at the 5 million, then the profit will be only 1 million, and that the 4 million will be taxable and not the 4 millions. As the taxable persons received a dividend or profit is from the UAE resident, yeah, this means that that resident dividend is generally exempted. So certain exceptions are there on the participation interest. So Section 5, other adjustment and some other non-deductible expenditures. Entertainment costs that we already discussed, certain exceptions on the if it is paid to members, partners, customers, suppliers, and all. So 50% allowed for deductions. And pension contributions, it is paid to the approved schemes, approved pension schemes. Then we can get the benefit of the contributions. So donation contributions were already explained. So exempt income cost, if income is exempted, then definitely the expenses are not allowed for deductions. Personal expenses are not allowed, which is non-business related, and only expenses is not allowed for deductions. A related party in 20% cases, and 40 millions is in case of related parties, and 500,000 in case of connected persons. That 40 millions is annual transactions during the year. Aggregate transactions exceed 40 million, then you have to separately disclose the separately have to disclose the settings. So, and in case of connected persons, if it exceed 500,000 per person, then we have to disclose the separate settings. Tax liability and tax credit. Does the taxable person wish to claim tax credit? In this, it means so in between the member of qualifying group, if one entity have a loss and an entity have profit, then you have a rights to claim that, and you can no need to pay any tax on the profit. Suppose A entity have a 500,000 loss and B entity have a 1 million profits. If they are the member of the group, so we can claim that benefits if turnover is if ownership is 75% or more. So it must be satisfied. So that 75% ownership is very much important. So we have to test that. Does the taxable person wish to use any available tax credit? Yeah, if such resident persons were paying the tax in the foreign jurisdictions, we can get the double tax. You can get the tax credit to avoid the double taxations. Yeah, then the sixth stage and the seventh stage is the final review. Then we have to submit the filing. So this is the major issues while we filing the returns. So I'm going to share the step-by-step filing process. So let's start with the filing.
Bijay bro, can we take a 5-minute question session or we will take on last?
We'll take on last.
Okay, no problem.
Is this visible?
Yes, it is.
Yes, it is visible.
Yeah. So this is for the SBR, Small Business Relief. Okay. So only we have to fill the two sections, taxpayer details and the elections. Then after that, there is no any other field is required to fill the details. So on these cases, if your turnover is up to 3 million, this provision is applicable to the entities whose turnover up to 3 million in a tax period. So in the taxpayer details, if we go at first steps, so these are the details of the TRN and company's name in English and Arabics, and then address of all the entities, address of the entities, and that billing name and numbers and contact mobile numbers, email ID, and all. So this comes automatically when we submit, when we apply for the registrations, and we already mentioned everything there. So it comes from there. So if you need any amendment, then you have to go for the amendment. So, and on the last here, is the above information is correct? If it is correct, then click yes. If it is not correct, then click no, and it opens the options to amend the taxable persons. It opens the
Your
windows.
screen is not opening, I think. We are in the folder. I think the PDF is not open actually.
Wait.
Now it is okay.
This is fine. Okay.
Yeah.
This is only for the SBR, Small Business Relief. Okay, and there is only two requirements. Section is required to submit the SPR. So first, taxpayer details. So it comes automatically from the registrations, that details. We already submit the informations and the TRN number of the entities and taxable person's name in English and Arabic, and contact details, email ID, and mobile numbers and address of the business. So, and here, is the above information is correct? If the above information is correct, then we have to click yes. So if it is not correct, then we have to click no. Then we have to apply for the amend the taxable persons. That window is open here. If you click no, then it asks for the amendment. So then we have to go for the amendment that amend the information. Then we have to come back again. So taxable persons informations is the taxable persons partners in the owner mode incorporated partnership, unincorporated partnership. It means that in case of unincorporated partnership, that profit is not taxable and the partners are taxables. So that's why they are asking. So if you have you are in a partners in owner more incorporated partners, then your profits from there we have to incorporate in these four returns. So the purpose is to incorporate the profit from this unincorporated partnership. We have to merge here as per the holdings. So And next one is the tax return being completed by the government? This is not we are generally not filing the returns for the government, so that's why it's no. So always I think we have to click here. So, and revenue, they're asking the revenue. So revenue, we have to mention the turnovers here. So, and then it determines if your turnover up to 3 million, then that SPR windows will open, but we have options to choose either SPR or no. So, but if your turnover, suppose you put 4 millions, then you can find these options. If you turn up to 3 million, then we have options to elect the SPR or normal provisions. So that's why I'm just circle on the red color. And it has a taxable person's financial statement has been prepared on the cash basis accrual basis. Normally we prepare on the accrual basis. That's why we always click here. And does a taxable person conduct more than one business or business entity activity? That it comes from the that registration. So if we put more than one activity, then it comes automatically that whatever we submit the activities on our registrations. So we can also amend that. So, but we cannot amend from here. So is the taxable person member of the multinational enterprise group? If you are a member of the multinational group, then it asks you're crossing the threshold of 350 millions, and then you have to comply the additional requirement of transfer pricing and the additional disclosure of transfer pricing, and that's what the purpose is. Is the taxable person incorporated or otherwise established and recognized in the UAE law? Yes, definitely yes. So is the taxable person's is the taxable person taxed in the foreign jurisdiction? So it means just to avoid the double taxation, it is asking this options. So, and is the taxable person incorporated, established, or otherwise recognized in the free zone? So if it is yes, then click yes, otherwise no. So, and the second stage is election. That elections stage second. So elections, they ask the elections at the realization basis. The purpose is if we click here cash basis, then this option will not be available because of we already adopt the realization basis. So if we click here accrual basis, again it is asking that will the taxable persons like to elect to use the realization basis again. If we adopt the accrual concept, then we have options to choose either to pay the tax on the unrealized gain or loss. So if we click yes, then that unrealized gain or loss to be adjusted, and from the PNL and other options are there. So and if you click yes, then it asks the is your entities, bank or insurance companies. If you click no, then it doesn't ask these questions. And again, that's assessment liabilities and all. So transitional rules is the taxable persons making an election to adjust the taxable incomes from the for the gain recognized on qualifying income properties. So this is also very important. So that profit and loss that we already discussed qualifying the income property, if we want to get the benefit of a unrealized gain or loss, so that appreciations, then we can have options to claim that. So no need to pay any taxations. Is a taxable persons making an election to adjust the taxable persons, like here that in case of the difference is the both are same, but here difference is any and all. So it covers only certain assets and it covers all the assets. And if you click yes, then we have to attach all the schedules. Schedules means date of invoice of purchase, acquisitions, and date of acquisitions, and market value of the assets as of beginning of the financial years, and the property valuations also. So these are the required informations. And if we click yes, then here the option shows that we have to attach the certain informations to justify to claim the benefit, like to claim to get the benefit of appreciations. This is options. We already put the turnovers less than 3 million on the first here. If we put more than 3 million, then we couldn't get these options. Here we have mentioned the turnover is less than 3 million. That's why this option is still open. So we are asking to adopt this SPR or no. So if you click yes, then that everything is finished, then it goes to the final review and we have to submit the returns. So if we click no, then it will open all the windows, other 4 windows, and we have to fill everything there, and we have to attach the financial statement as well as the supporting documents as per the requirements. This is applicable for the SBR only, and just 2 sections are there to fill everything, and other than that, so it's not applicable for the SPR. So just basic informations, and we have there is options. These are not mandatory to attach the financial statement also. So we have options to attach the financials, and depends on our preparations and all. So okay, I'm going to non-SPR. So is this visible?
Yes.
Okay.
Yes.
That is for the SBR, and this is for non-SBR. If we click no on the SBR options, then it opens like all the next 3, 4, 5, and 6 will open. So if we adopt this SBR, then turnover in case of up to 3 million, then we have our options. And if you click yes, then so we finish on the second stage. So if you click no, so everything is same on the first and second sections. That first and second is same. So that taxpayer details on the first sections. So these all are same, and second sections, yeah, it's asking the information is correct or no, and a member partners of unincorporated on or more unincorporated partnerships, and that the government is or no, and adapting the cash basis or equal basis, and asking the turnovers, asking the business activities, and yeah, and so it asks the proportionate revenue from the different business. So if we add one or more than one activities, then ask the proportionate revenue from the different sectors. So we have to also fill everything here. So to correct the returns properly, everything. So otherwise, normally people are not updating this column. So, but it is mandatory for the filing. And again, asking the same things that we already covered that. So member of MN is it's a free zone or mainland business, and it's a president in the foreign jurisdictions or no. So it's a free zone or no. And the elections we already discussed also. So that realization basis, the purpose is either to tax on the unrealized gain or loss. So that is the purpose. Click choose options. So and same thing, and transitional rules. Yeah, in case of email property, qualifying email property, and you want to claim claim that appreciated value, like that I already discussed also. So that on the beginning of the tax periods, if your market value, if you value the assets, properties, so we want to benefit for the appreciations that I already told you. 1 million, I purchased 1 million in 2020. I purchased the immovable property at 1 million. At the beginning of the 2024, if the value is of the assets, immovable properties is, let's say 4 million, you already disclose that my property's value is 4 millions, and suppose I'm selling this property in 2026 at 6 million. My total original cost is 1 million, and the value at the beginning of the tax period is 4 million. And if we sell exceeding that 4 million, then only the tax will be applicable. Tax that tracked on the exceed value. So we have to disclose that at the first tax rate filing. Okay. If we don't disclose this valuation reports and everything, the date of acquisitions, everything we have to mention, and invoicing and all, so then only we'll get the benefit of when we sell this property. And and then again, this is also same, everything is same. So small business, if this turnover is 47 millions, so that's why it doesn't ask this SBR options. I already told you. So if we put turnovers less than 3 million, up to 3 million, then ask the options to either to choose the SPR or no. So, but here it doesn't ask any options to choose that SPR. So it goes on a normal provisions applicable for the mainland entities. Transfer within a qualifying group. Yeah, if we transfer within a qualifying group, then there is a conditions of 75% holding, and it must be the member of same groups and such accounting financial years, accounting concepts. It should be adopted on a. It should be same for the both entity. So then only we'll get the benefit and asking for the purpose. So business restructuring is the same, and if you transfer assets and whole or part of the assets, then we'll get the benefit of that relief. We'll get the relief and foreign permanent service schemes and is a taxable person foreign permanent that our purpose is if you have foreign entities, foreign permanent, does the taxable persons have any foreign permanent establishment? It means that if you are generating revenue from the foreign entities, then and we pay the tax in a foreign country, we'll get the we must have the tax residency certificate and everything, and then we'll get the benefit of tax relief. And the first and second, we already discussed on the SPR also, and everything is there. And on the second stage sections, accounting schedules. This is all about the statement of P&L, profit and loss, statement of OCR, and statement of balance financial positions. Here we have to disclose the revenue and the cost of sales, and we get the gross profit, and we have to put this salaries and wages and related expenses, depreciations, fines and penalties. I'll discuss regarding this. So it's allowed only in case of breach of contract or the agreement. So not allowed in case of the breach of law. And donations, if it is paid to the qualified person, then it's allowed for deductions. And client internet expenses. So these are certain exceptions. There is certain exceptions. We already discussed on the first, second part. So other expenses which is not covered here, then we have to mention here, and other operating and non-operating expenses, excluding other listed below. And dividend receipt, if we have incomes from the dividend, so we have to discuss here, but we can adjust. We have the options to options for the adjustment. These are not actually taxable, but as per the P&L, we are disclosing everything here. So, but later on, we have options to adjust everything. So we have options to return a plus or minus. Interest expenses based on the 12 millions and subject to the 12 that if it exceeds that 12 million, then subject to 30% of the EBITDA, that provisions will be applicable. And gain on disposal of the assets and losses on the realization basis. And we have to disclose everything, whatever we mentioned so in the P&L. So and other statement of OCI, and these are the reclassification of the assets, and so we have to disclose here if it is there. So in the P&L and OCI, then we have to mention here. And this is especially profit and loss and the comprehensive other comprehensive income. So and on the third stage, statement of financial positions, we have to mention everything: current assets, non-current assets, non-current liability, and capitals, reserve and surplus. Everything we have to mention here. So this one is current assets and non-current assets. Non-current assets here, property, plant and equipment, intangible assets, financial assets, which in long-term receivables are covered here, and then other long-term investment. Other non-current assets, which is not covered in the financial assets and the other category. So we have to mention here, and it comes the total of current and non-current assets. So and total. And here, total current liability, we have to disclose here. The current liability and current assets, that doesn't ask the complete breakup, but it asks the total amount. So in case of non-current assets, it asks the details of intangible assets, PPs, other tangible assets, and total liability. And equity portions have a share capital in earnings, and other equities means shareholders' current account. And it comes that ask the number of employees here, average number of employees during the year. So we have to, it can be on the fractions. So like suppose It is asking the average number of employees during the year, how many number, like suppose one few employees works for the 2 month, 3 month, 40 days, 30 days, 50 days, then we have to calculate the average number of employees for the tax periods. And again asking audit, have the financial statement has been audited. So if it is yes, if it is approved by signed by the auditor, then click yes. In case of mainland business, if your turnover up to 50 millions, then there is no mandatory requirement to get this signed copy from the auditors. We can attach the draft report also. So if you want to sign, if you want to attach the signed report, then you have options, but that is not the mandatory provisions. We have to click yes if in and the opinion, asking the opinion, audit opinions. So there is a 4 options: qualified, unqualified, adverse, and disclaimer. So options are there, and we have to normally put this unqualified. So and then asking the form, auditors, audit form, and name of the auditors. So accounting income. This is the revenue from the business operations. So and asking, I already discussed that equity methods. Equity methods means if we invest on some other entities, the profit, we can appreciate the value of investment in our books. If we invest such portion of profit, we can appreciate in the books of in our books. That I already explained you that 4 million profit in the on entities, and 25% are holding, and 1 million are prop persons, and we can book such 1 million in the investment. So we can record such amounts in the books of accounts in the holding companies, like A companies hold to B, and then A company can book such amount in the books of A. So such 1 million will appreciate the value of original investment. Has the taxable persons recognize any realized or realized gain or loss in the financial statement? That already discussed, which is not covered in the P&L. So and which is only covered in OCI and other comprehensive incomes, and the directly to the balance sheet, like revaluation reserves, that it is asking for that. So if it is there, so it is mentioned something in the OCI and directly on the balance sheet items. So then we have to disclose here. So the transitional adjustment that I already discussed, we have to attach, claim the benefit of appreciations. We have to attach these valuation reports. So as on the property should be valued as on first of the tax periods. So we have to attach everything. Then we get the benefit of such appreciations. So exempt incomes, that dividend. So if we are getting dividend income, then we have to click yes, and these are the exempted from the corporate tax. So it's not allowed. And the participating interest, and also in certain exceptions are there. So, but generally, if you hold more than 5% in any other entries and non-resident entries, and holding period is at least 12 months, and in such case, you'll get the benefit of exemptions, and in other cases, you don't get any benefit on the participation interest. Some non-deductible expenses on other adjustment. Non-deductible expenditures. So entertainment expenses, I already discussed this point also. This is with the certain exceptions. So generally, if it is paid, it was spent for the employees' benefits, like entertainment, some events, cultural events, and all in office. So if you spend for there, so we'll get the benefit. If it is especially for the suppliers, customers, partners, shareholders, and in such case, we don't get 100% benefits. We only have options. We only can claim the 50% of the expenditures. And same like the pension and contributions, if it is paid, contributed to the non-approved scheme, so then we have to add back. Charitable donations, contributions, if it is not paid to non-qualifying non-qualifying public benefit entities, not paid, not contributed to the charity stores. We had randomly contributed to any other person's private entities, then we don't get a benefit of donations. We don't get a benefit of deductions. And the same like the expenditure incurred in deriving the exempt incomes. If your income is exempted, then definitely this is not allowed for deductions. You have to add back. And the profit dividend, generally these are exempted. So, and certain exceptions are there on the participant interest. And expenses not fully and exclusively incurred for the business purpose means these are not for the business. So it's especially for the person use, then these are not allowed for deduction. Any other which is not covered on the above points, so we have to disclose here. So, and we have to add back, and that increase the taxable income. And that adjustment of income and expenditure, like interest expenditures, that 12 millions, and that's subject to 30%. These are we have to disclose here. Does the taxable persons wish to deduct any brought forward interest expenditure? Yeah, if we have any brought forward interest expenditures, we can carry it for a 10 financial year, 10 tax of periods, 10 years. So if we have any carried interest expenditure, then we have to click yes, and we have to mention that carried figure, and we have to adjust. We can adjust from the current tax periods if it is eligible. So we have to taste such eligibility also. Yeah, this is that limitations, interest deduction limitations, that if turn interest is exceeding 12 million, then there is a subject to 30% of interest EBITDA, then we have to test this conditions. So transactions with the related parties and connected persons. So where there are any transactions with the related parties in the current tax periods? If yes, we can click yes. Did the aggregate value of the transaction with the related parties exceed 40 million? If yes, aggregate value during the years exceed 40 million, then we have to click yes, and we have to attach the proper schedules to whom we have given some, we have deal with the transactions, purchase, sales, transfer, whatever. So we have to disclose clearly the total amount of transactions and parties. So if we click no, then it doesn't open any windows. So descriptions, additions as a result of adjustment to the transactions which are unlisted. Yes. So we have to that asking the transactions in between dealing with the related parties, then we have to disclose here. So deduct the result of adjustment here. So if there is any adjustment, like we undervalued or overvalued, like normally we are getting the benefit from this in related party transactions. That's why FT is asking, tax authority asking to adjust that figure, not to get the benefit from the tax. Where there are gain or loss realized in the current tax periods in relation to the assets and liability previously received from the related party transactions, this is also the same. So if we got the benefit in the previous periods, and we have to disclose the same, and which is based on the related parties. Where there are transactions with the connected persons in the current period, just is there any transaction with the connected persons, then we have to just click yes, and otherwise no. So when the aggregate value is 500, I already discussed regarding the 500,000 and then 40 millions. In case of related parties, that we have to disclose if aggregate turnover is exceeding 40 millions. In case of connected persons, at least one. You just check this line. So at least one connected persons. In one connected persons, we have a transactor exceeding 500,000. Then we have to disclose here. And if we click yes, then we have to attach the schedules. It opens the windows. So then we have to attach everything clearly. Same thing, and related party and person and income and expenditures derived from the qualifying investment funds. So these normally are not relevant for us. So this is different qualifying investment fund. So any other adjustment not capturable, any other adjustment we want to adjust here. So click yes. Otherwise, if it is not everything, if we covered everything there, so on the top, so then there is no such options and there is no requirement to add any details. So tax liability and the tax credit. Then after doing all these things, so we discuss first taxable persons, second elections, accounting schedules, means that PNL and all. So some adjustment. If something is required to adjust from the PN and all, so we have to adjust here on the fourth stage. So other adjustment which is not covered on this fourth, we have to adjust here, and at the end we have to calculate the tax liability after taking some after getting like doing some adjustment. So we have to calculate the tax here. So then we have to review the final draft. So before submitting the corporate tax, I'm going to stage 6. Yeah, on the stage 6, tax liability and the tax credit, taxable income, and yeah, it comes from the above. So after adjustment of all these plus minus, we'll get this taxable income. So does the taxable person wish to claim the tax loss? Yeah, that's one is another group of entry that within a group of qualifying group. So we can claim the benefit of, like, we can claim the losses, we can carry it and utilize from one to another. So tax calculation taxability, this comes from the all this adjustment, and that taxable incomes after adjusting all these irrelevant items. So which first of all we have to get the P&L profit and loss from the net profit or loss from the profit and loss. So and then I have to adjust everything there, and then we'll get the taxable income. So here we have to pay the tax according to the corporate tax standard rates. That for the mainland entities, we know that 0% for up to 375, and exceeding that, we have to pay the 9% corporate tax for the mainland entities. And if there is any provisions figures not including the city returns, we have to include here. Otherwise, we go on a final review. So we have to click here. So I confirm the below in transaction, and then we have to submit the returns. So these are the all the information required for the mainland business. So not for the SPR. So SPR I explained there is only 2 sections, and here we have 6 sections. And for the pre-joins, we have one more options only. So that other than this, so the 6 is same, and one more options will be there on the on the second sections, pre-join provisions. And I'll just go through the pre-join draft. So just for your understanding, so I just open that and then go through this. But everything is here. So I covered everything, I think. So I'm going to share that pre-join provisions. So is this visible?
Yes, yes, it is visible.
Okay.
You can continue.
Yeah. That we discussed before. So taxpayer person's details is there. Everything is same. So this is for the different entity, but everything is same for all the entities. So it comes from the registration details, informations we submit on the corporate tax filing, so corporate tax registrations and VAT registrations. So on the first stage, that taxpayer details, and on a second stage, if does the taxable person meet the requirement to consider the qualifying free zone persons? So first of all, let ask, it is a free zone. Yes. Then if it is qualified, then free zones details we have to fill everything that to meet the qualifying benefit, to get the benefit of qualifying free zones. So we have to fill everything. So free zones detail, we have to fill everything here. So that revenue from the entities, if they have a foreign PA, then we have to just mention here, and then non-free zone persons in the respect of commercial properties, and also we have to fill everything required as like to meet the condition of qualifying persons. So it tastes everything from here. So then you'll get the benefit of qualifying free zone persons. Depends on the testing and all. So the second option is only the difference. So we have to here asking the de minimis conditions and derive from the properties like located in the free zone persons, employees are there or not, properties are there or not, locations, business locations, dealing with the related part in between these free zone persons or not. So these are the required fields for the regions. I think we had also one webinars which was especially for the regions before, so it was also under discuss, and that is only the difference. And so we have to fill everything for the to meet the qualifying benefit. Substance, employees, properties, locations, transactions, and also we have to check all these things are there or not. So and it goes to the third stage, elections. So the additional is only the regions provisions. So I go to the live. I'll just open the windows. So then I'll show you how to just uh, go on a live there. So I just go to the FTA portals, so then you can understand better. So I'll close this. So then I open. Just a second, I'm sharing that. This portal is visible, right?
Yes, it is visible.
Okay. So yeah, I'm just showing the live screen. So this is, you have to click here, and we have to go to Corporate Tax, and we have to click here, and we have to click everything. But I already filled that details, but I want to remove that first. So again, I have to fill everything. So if I remove that, whatever I fill. So yeah, this is a step-by-step process. Click here and confirm, then proceed. Yeah, we already discussed all these things: taxpayer totals, elections, accounting schedules, adjustment, reliefs, and also other adjustment done. So these are the details of entities. And if it is yes, so we have to click here. If it is no, it ask to amend these details. If it is something is wrong, like mobile numbers, email ID, registrations, if it is wrong, then we have to amend from here. We have to click here. So if everything is right, then click here. Is the taxable person information? Is the taxable person a partner in owner partnership? If you click yes, then ask the details of the unincorporated partnership. This is not a mandatory, this is optional. So if you click no, if you are not a partner in on or more unincorporated partnership, then click no. So if you click yes, then you have to, there is options, there is not a mandatory, but options to either add or no. So it depends on you. Is it tax returns being completed by government? This is not the, actually we are not the entities, but we don't normally don't file this for the government entities. For the big companies, I think the only big four, they file the returns for that. And but only in certain exceptions they are required to register. So, but in most of the cases they are not even required. Yeah, we have to disclose the turnover. So over here first, and then accounting concept, and that approval cash or approval basis. So and does the taxable person know? So it comes from the amendment or registration. So we mentioned the one activity. That's why it comes it's only the one activity. Then if we already disclose more than one, and then so it comes automatically from there. So and we have to if in case of more than one activities, then we have to add the proper percentage of revenue. And in case of MNCs, if you are the member of MNCs, then click yes and ask the other things. Uh, and yeah, if you're registered in these UAE laws, and also you click, it comes automatically here. So, and if you are resident for other foreign entities, then click yes, and you'll get the benefit of double taxations. Otherwise, click no if it is not there. So, and ask if you are a Frisian person. So, no. If you click yes, then it goes to the Frisian portals. Like you have to fill everything, and just it's discussed with you just before. So, if it is not a Frisian, so then we click here. So if in case of regions, then we have to fill everything of the region provisions. So no, I just click no. In case of regions, everything, there are lots of requirements, so that's why we have no to the limited time, so we cannot discuss everything here. So then save everything and next. Sorry, I didn't put the value, so we have at least put. We have to click everything here. So if we miss anything to do, so then this doesn't go on the next steps. On a second stage, realizations that I will discuss that if we want to adopt this realization basis, click yes. So the ask for the bank or pensions companies, if you click no, then doesn't ask that. So, and in case of email properties, if you want to disclose on the beginning of the tax periods, you want to attach the property valuation reports, and also you can get the benefit of that appreciations on the assets. So if you click yes, asks to attach the email property schedules, and also we have to attach everything here. Date of market Makani, it is buildings numbers, date of ownership, original cost, and the net book value. So, and we have to attach here that everything, documents and all. So cancel and go back. And same thing here, it asks any properties. Here it asks all the properties. If you are electing to adjust taxable on all the email property, then click yes. On certain properties, then click here only. So here I don't click anything, but yeah, and also asking the if qualifying financial assets and liability, then I'm just clicking no. So we have to attach everything here. So to justify the fair market value. Here, small business leaves transfer pricing qualifying business. We don't have any turnovers, that's why it doesn't ask that. Transfer pricing transfer within the qualifying group, then we get the benefit if we transfer that property in between the groups. So we'll get the benefit. So if it is yes, then we'll get the benefit and we'll claim the benefit. So if it is no, then we just click here. So business is business restructuring relief. Same thing, merger acquisitions, merger demergers, So if we have that activities, then we can click here to get the benefit of gain or loss, to get the benefit of that taxations. Foreign P, if we have any incomes from the foreign P, then click yes. Then in other cases, don't click no, don't click yes. So we have to save everything and have to move forward. Same thing, this is we have to fill everything P&L items. So I don't fill anything here. I just put the 000 just for your understanding. I just open the window. So I am not going to fill anything. So due to some limitations in time. And asking that file system has been audited or no. So if you click yes, ask the audit opinions and auditors, auditor firm names, auditor's name. If you click no, then doesn't ask any questions. This column. So we have to fill all the box. Yeah, that adjustment and the sort of exemptions, exempt incomes, we have to so there is accounting incomes comes from the P&L, so revenue from the operations. So there's the investment on equity methods. I'll discuss regarding this, that about the 4 millions profit and 20 hours holdings. I will explain you. So if it is yes, click here, otherwise no. Has the taxable persons recognize any realized or that gain or loss in the financial statements, which is not in the P&L. So if it is, if anything is there in this OCI and balance sheets, so if it is directly goes to OCI or balance sheet, then we have to click yes, and we have to disclose here also the information. So transitions adjustment that I already told you. So it tastes if your properties, if you acquired any properties before the beginning of the tax periods, first tax periods, and your value is increased, and you want to get the benefit of that increment, then it is asking that to get the benefit of that appreciation. Just a second. Yeah, these are the transition adjustment. If you purchase any more property on before the first filing period, then we can revalue the assets. We can get the benefit. If in case of if you have a properties, yes, then click no. And exempt incomes in case of profits, dividends, and participation interest. If we have, then click yes. Then no. Otherwise, no. Save as a draft. Yeah, move on the next. These are the adjustment, charge which is not allowed for deductions. These are adjustment. I didn't do anything here. So that interest expenditures, if we have such interest in also to exceeding 2 million, then we have to click yes. Then we have to test the conditions. So yeah, that brought forward and interest expenditures also we have to click here. So any other cases, we just click no. So transaction the related party and connected persons asking the same questions that in between these during the tax periods. If you are dealing with a related party, then if you exceed that 40 million, then we have to disclose the schedule also. So in other cases, no need to disclose proper schedule. So yeah, that in the previous year also they're asking some adjustment is required to be done. So those just click yes, otherwise no. So and transition to connected party, if you click yes, then ask the 500,000. If you click no, then doesn't ask any questions. Yeah, this is qualifying investment fund. So this is actually not relevant for us. So normally it's not relevant, and just click no. So and any other adjustment not captured above. So save here. So same thing. I'm going to repeat that, but I'm through the portal only. So just so I'm not taking much time. So yes, and any tax loss you want to adjust from the member of the tax group, qualifying tax group, then click yes, otherwise no. So, and the taxable incomes, corporate tax liability, it comes automatically. And does the tax person wish to pay the tax credit if you have if you paid any tax in the foreign countries and you are eligible to claim the benefit, then you definitely get the benefit, everything from the informations. Is there any provisions and estimated figures and all? Also no. So, and we have to attach the financials. Normally, if you turn over up to 50 millions for the mainland business, there is no such requirement for this to sign the reports, but financials is mandatory. At least we have to mention the financial part. So, and adjustment schedules are not much mandatory, but we have to attach that. So, and if anything is there, then we have to put on the regions and notes. So we have to attach here. So we have to upload that financials and click here. So in case of these options are actually not relevant for all the entities. If you see documents to support the market value of the qualifying properties, this is actually property valuations, tax invoice, and all. So this is very important. So I that PPT I already discussed with you. So that we also share on the group. So you can focus on the second part. Second part is very important. I already covered the major questions there. So if you clear on these questions, then you feel like it's very easy for you to file the corporate tax returns. And if it is not required, then no need to attach any documents. And documents support the market value of the financial assets and liabilities. Same like this for the financial assets and liability. If you want to appreciate the value of such assets and liability, then you have to attach the justifiable documents. I have to prove that. So the value of the assets is this, and the TRC is also important in case of income from the foreign resident, like a non-resident persons. Then we have to get the benefit of foreign tax credit. We have to attach the tax to TRC. So otherwise, normally the financials is enough. So we have to attach here and then save and submit, and then it goes over the final review. So if I click next. So it asks the if you have not upload the financials, I just say anything. I just write anything. So then it doesn't ask any questions. So, but we have to attach the financials at least. Ask and it goes on a final review. Review and declarations. We have to cross check everything is fine or no. So then we have to finally submit the returns. We have to go down and click confirm and declare. So I'm not going to submit that. That's why I just cancel the applications. So this is the final corporate tax filing. So and yeah, this is the complete filing, compliance related points, and then filing. And yeah, everything is covered here. And so if anybody have any questions, and let me ask. So thank you everyone for your patience.
Thank you, Bijay bro, for the well presentation and everything you have shown was so clear, and I hope everyone has clearly understand everything part. But there is certain question they have raised. One by one, we will entertain that question. Or also participant can raise a hand and ask your question. If there is any doubt or any question that you want to answer by our speaker, then you can raise hand and you can ask also directly.
Okay, Rajeshji, shall we go one by one? Let's say one from the chat or one directly, or how we want to go?
I think I have seen lots of questions here, so it is not.
No, I have summarized the chat. I have summarized the chat. If you want, I can pull from the chat.
Okay.
So shall we go from the? I mean, Rajeshji, I sent you already. You can see if you want the questions from the chat box.
Yeah, I think it's better if we do the chat box, and then if there is any queries pending from our participants,
okay,
we
great,
can.
Okay, Rajeshji, you can go for the chat box. I have sent you already in the WhatsApp. I'll pick up for the timing when Rajeshji is downloading that one.
Yeah, please.
So you can continue, Rupesh.
Yeah.
Yes. So now the questions. So many questions from our ex-chairperson Lilara sir. Please include deferred tax managerial remuneration provision. His question, I am saying, if he is here, he will also, I mean, ask. He will also clarify what was the question. Is the audited financial statement compulsory, or management report is enough for CTR? Is the donation fully allowable, or any cap is there? I think one by one I'll go. Is the donation fully allowable, or there is a cap? Is from Lila sir. Question.
No, there is no cap. Donation is only allowed for the certain if you contributed to the qualifying public benefit entities. So they're only allowed for the deductions. Normally, it is not allowed for deductions. If you give anyone, there is no any cap. So as of now, there is no any conditions. Okay, no any cap. So but depends on the entities to whom they were contributed.
Okay, what about the sponsorship fee and commissions to the business partners? If Leela sir is here, I think he can clarify business partner means what he wanted to say.
Yeah, business partners, they are actually connected persons. So it depends on the arm's length. So if you are drawing salary, some meeting expenses, some other expenses, it is actually not easy to justify. So it is very hard to explain. So it must be, suppose some businesses, even my clients, they are drawing, they are just generating 3 million turnovers and they are drawing 70,000 per salaries, 80,000 salaries. And this is not reasonable. So they just want to waive that, get the benefit of taxation. Just that is not the solutions. So it should be reasonable. So yeah, definitely we can get that. So, but depends on the fair value. So it should be the proper, like if someone is like related parties and connected persons are the very crucial persons in the business, they can waive anything, like they can do anything. They can even if they plan properly, then they don't pay the tax. But this is not the correct way. So we have to justify all these expenses. So
Okay, let's say somebody is okay. I think Leela sir, he would have spoken it properly. I think he meant to say sponsor fee. I think it's a commercial. That is obviously it's commercial. So since we are getting
Yeah,
benefit,
thank
it's
you.
supposed to be allowed.
Yeah.
Yes, I think correct. Yeah. And if another we are giving to somebody outside, then it should be qualifying that what is that called non-profit organization. I guess that listed. I think.
No,
Okay. The
Rupesh
yeah,
sir,
Leela
thank you. Rupesh sir, thank you. Just
Leela sir here. Yes.
Rupesh sir, thank you. Yeah, Rupesh sir, thank you. Just I mean to say, business partner means maybe informal, not formal, and there is no contract. And business entity should pay some commission to them. Is that allowable or not allowable? This is my question.
yeah, definitely it is allowable. See, if there is any contract might be based on the proper
No
conditions.
contract. No contract, but in that's the
Okay,
reason I said
without
informal and
without
without contract.
so without contract, if you are paying something, then this is actually not allowed because of to just you have to justify for all the expenses. Without any evidence, you are putting something random figure, then how they allow the deductions?
Thank you. And my
And
next question was managerial remuneration. I think you have already covered. And can you just
yeah,
repeat?
managerial remunerations, it depends on, see, they are the owners and they can draw anything. Like suppose I already discussed small who are adopting small like whose turnovers is less than 5 million, 10 millions, and then they are drawing 1 lakh, 2 lakhs per month just to pay the less tax. So, and is this really good? And is this really allowable? And actually not. So that's why you must. So transfer pricing, people are
No,
not getting like
yesterday,
understanding.
Does
yeah,
it
sir,
should
yesterday
based
one
on the
auditor, no, yeah, Professor, just I'm practically saying, yesterday one auditor explained up to 500,000 that is allowable, but I have never seen and nowhere I have seen that up to 500,000 there is no provision. Is there any
No,
such
no, there
provision?
is no provisions. So I don't know how they got this information. So, but
Yeah, that auditor
corporations are
is
not.
from Big Four. Auditor
So
was
yeah,
from Big Four.
so
That's the reason I asked the
see, we
question.
know that even Big Fours are same. We are working on. Suppose we are working on the Big Four, so we explain something. So without proper information, they can explain that. So even I asked and Big Four guys, so they give me wrong informations. And again check and go on a
Yeah,
FT and somewhere, and then
thank you
I
for
find the correct
clarification.
answer. So,
Sponsorship fee. This is one very critical question these days. Sponsorship fee. In other Gulf countries, they don't allow. But what is about in UAE?
Uh, even this is not clear as of now. So I'm still not able to give the clear answer. So some provisions is still not clear. So I don't give a clear answer as of now. But someone are uh,
Hi, Bijay. I can clarify on this point.
okay. Yes. Thank you.
Yeah, we have some got the private clarification in respect of this sponsorship fee. See, technically, in our practical parlance, we are using sponsorship fee as a separate treatment. But technically, if you are going, sponsorship fee is paid to the owner of the company. So technically, it will come under the managerial remuneration. Side agreement, whatever you are making, that law does not recognize you. So for this, we have gone to a private clarification from our side for the client. So it has been very pretty much clarified from their end that sponsorship fee also will count as a managerial remuneration and it should be covered as a whole manager remuneration, which should be come under an arm's length principle, as Mr. Bijay has explained.
Correct, correct. But in other
Thank you,
Gulf
Suraj.
countries, that is non-deductible expenses. And
No, manager.
forex revaluation. Yes, sir.
Yeah. So
Anyone
means
was
sponsorship fee or manager remuneration or whatever name we are giving from our side, it's our from practical parlance. But from when we are
correct.
going legally, it will come all under the manager remuneration. So it should be under the
Correct,
cap,
correct.
as cap is not mentioned, so that we have to take care on case to case basis.
Thank you. And next about my question was forex revaluation reserves and provision. Like say practically in every entity follow the different exchange rate for different currency, and our custom rate and something different. And there is always a variation between the custom rate and our internal rate. So there is a revaluation is always there, and auditor is always putting this the provision for forex revaluation reserve provisions. Is that allowable in our corporate tax filing?
Yeah, this actually.
In this case also, foreign exchange reserve means see, tax as per we have to go as per the regulation. So they are clearly mentioning that you need to take the conversion rate as per the central bank, not as per the other things. And then this reserve, whatever you are creating, will be completely dependent on the basis which election you are doing. If you are doing on realization basis, then the provision which you are creating will not be allowed, because that is you are creating provision based on the unrealization method. But if you are going on unrealization basis, then you can take the benefit of that one, but subject rate which you are taking should be as per the central bank.
Surajji, just open your camera if it is possible.
No, I'm little outside, so I'm not able to open the camera, so that's why.
Yes, he's
Still, thank you,
seriously.
Surajji. Thank you, Surajji. Yeah.
Okay, thanks.
Okay, we can move ahead with the questions, I guess.
Yeah.
Further.
One more question.
Yes.
Is that managerial remuneration should be routed through this WPS or not?
No, it's not required if it is drawn by the owners, and there should be a contract. There should be a proper agreement. But suppose if you are drawing some certain amount, so normally owners they doesn't draw the salary on the basis of WPS. So, but they only are allowed to take the salary without WPS conditions.
Okay. So, and one more question. If let's say one company has purchased investment property and in 2023, but they did not revalue that property in 2024. The property has been slightly gone up, and the revaluation profit they are going to show in profit and loss, which makes the tax higher. So, is there any option to claim the cost higher?
Yeah, that I already discussed regarding this. So I covered this point.
No, if you want, I can clarify, Mr. Vijay.
Yeah.
Yeah. So revaluation reserve, which we are treating, it will be going through the OCI.
No,
So
but in case of it should be
no,
profit and loss.
see, no. If you are going to the profit and loss, so what they are saying in the transitional provision that you revalue the everything, means like immovable properties, intangible assets, and financial assets in your revalued figure. So once you are preparing the financial as of 2023 end, which will be the opening for 2024, you yourself are declaring that it is getting revaluated from your end.
No,
So
but
once you have
in case of investment property, you can profit through loss.
sorry, I
You are
am
saying
not.
you are giving the example of this
I
non-current
think
asset.
from somewhere we are getting echo. Vijay sir, can you mute your
Some
mic?
echo is coming. Somebody has using mobile and phone both as laptop both.
Yeah, echo is
Mute
coming.
all. Let's mute all. Otherwise.
See, in case of financial assets, that
Yeah, I will
our
just
in case of investment property, we are not allowed.
mute all the part.
Yeah, Navin sir, you can unmute and go ahead.
What I am saying is, in case of financial assets, your revaluation income should go through other comprehensive income. But in case of investment property, I think it should route through profit and loss directly. As per, I think IFRS, IAS.
Yeah, that's what in the previous question which Mr. Lila sir was saying is that see that you are doing the revaluation based on revaluation is technically on realization basis. So if you are going through OCI, okay, that is already cleared off. But if you are going through the revaluation and then revaluation is which we are doing from our end is an on realization basis, that will technically depend on the realization basis which you have already adapted.
Yeah, Raj sir, please go ahead. Thank you.
Okay, Rajesh, yeah, I think
Easy, yeah?
we can go.
Rajesh, okay. Okay, I
Yes,
think
All right.
okay.
Rajesh is here. I think
Okay,
he's
let's
not
move
here.
to another questions then.
Hello,
Mr. Yes.
Upama has one question. She has asked on a chat box. I want to read that question. I think Upama has written that why is dividend paid to owner to be added back as a non-deductible expenses?
So
I
dividend,
think I didn't. Upama, can
we
you
didn't add that.
explain on this question actually?
He might be
Actually,
asking
Hello.
because in that other adjustment there is a column that if
yeah,
when you are going for the other adjustment there is a column that dividend paid to that you need to add it back. Normally
yeah,
as per UAE they are charging as an expenses for the dividend also. If it so is the case then you need to add it back. But as per our understanding dividend we are normally not claiming the expenses, so that point is not much valid from our regular practice, I can say.
yes. Actually, there's this dividend add back column. So I was
Please unmute yourself, Upmaji, first.
Your
I
mic
think
is mute.
Upama, you are on. Now
I don't
now
know,
you
someone
can.
is unmuting and
yes.
yeah,
Under the non-deductible expenditure column, there is
yeah.
also this dividend paid to owner as like one of the
Yeah,
items.
see, that was actually not correct, and as per the Indian standards and all. So I know that. So that was not correct, as said by Suraj. So if it is deducted from the PNL, like someone is charging as expenses. So if you charge on a PNL, so then you have to add back. So, but this is not a correct. But there should not be the option. But I don't know why they are putting these
That's what.
options and adding back. So yeah, so that is not the correct. Yeah.
Yeah, thank you.
So it depends on the if they charge on a PNL or not.
For today's session, we will take one last question, which is asked by Ashish Nepal. His question is, Mr. A, B, C, and D have a 20% each share in a two company. Can they be treated as a tax group? He's asking, can that two company can be treated as a tax group?
Which tax group? Are you talking for the VAT group or corporate tax group?
Corporate tax.
Corporate tax.
For the corporate tax, there should be state away 95% holding. So we cannot create below that conditions. So for corporate
tax group
tax,
is a subsidiary relationship. It is not common ownership. It's a subsidiary parent relationship with the
no. See, in case of VAT group, there is a different provisions. So you cannot combine the same provisions for the city also. So for the city, there is a different conditions for the VAT. For VAT, if owner is same, if management is same, we can apply as a group registrations. But in case of city, so we cannot do that. So there is a separate provisions. So there must be holding 95%. That 75% for the
I
qualifying.
also heard there is some 75% provision. What is that? Can you please clarify this?
Yeah, the 75, yeah, that 75 is the qualifying group that if you, 75 and 95, if you go on a corporate tax group registration, okay, then there is clearly mentioned that 95% is, okay, and but 75% is just to meet the qualifying group only. So if you're transferring some properties that we can losses from one to another, we can adjust from there. So, but registrations, so the provision is different.
For example, if
Yes.
Mr. Bijay is having 75% shareholding in one company, and Mr. Bijay is also having 75 or more than that percentage shareholding in another company, whether these losses can be set off between these companies or not?
Yes, correct. That is that provision. Yes, you can.
Can you please tell me again? So 75%.
He's asking. Okay, I understood, Bijayji. What he's trying to say that one person is having 75% stake in the both company. So either this both company can transfer their losses or not. So that qualifying group, the concept is for their purpose. You don't have parent company subsidiary relationship. Still, if you have two company under the same ownership, as you said already, 75%. Okay, you can transfer loss up to 75%. There are other provisions that's clear.
It means that SR special resolution it can be in one person, and that is the main
There are
concept.
other conditions also. There are other conditions also, but yes, that is what the 75% is about. That's the main difference. Tax group, as Vijay just said, it's only parent subsidiary relationship should be there. So qualifying group transfer loss, that you don't need to have the parent subsidiary relationship.
Thank you so much.
Other conditions also.
It's clear. It's clear. Thank you.
Thank you, Rupesh, for the clarification.
One or more question.
Yeah, we have only a 15-minute question answer session. We have completed 80% of the question we have answered. Remaining 20% we will reply on the chat, and we will provide on the group. If there is any other doubt, any question, you can send us on a WhatsApp. We will try to give all the answer on the WhatsApp. Now I think we have to move. I want to give the platform to Rupesh Pokhrel sir for the prize distribution.
Okay, let's give him a big rounds of applause to the Vijayji for having such a wonderful session. And yes, already Rajeshji told we are already little, late, I guess. Okay, so everyone wants to relax, eat some food. I think dinner time also happening. So I am sharing certificate to Vijayji, and bear with me because I have my technical expertise with that. Yes, here, okay, certificate of appreciation, Vijayji, it goes here, everyone can see it. Thank you, Rajeshji. I'll also share through the email the soft copy. Thank you.
Thank you.
Next
Thank
session.
you all the team and members, and thank you for your participation. We just keep sharing all these informations. We're trying to share the crucial information which is relevant for you. So thank you all. Thank you for today's webinars.
Thank you, Bijay Tiwari ji and the Rupesh ji for the appreciation and the certificate to our speaker. I am really happy that so many questions were asked and so many participants are involved in a webinar, which also show us everyone wants to learn and to grow. So we are so happy for this. We are already late of this session, so for the closing session, I want to invite our Vice Chair person Diwakar Bhandari ji for the officially to close the today webinar. So I want to give the platform to our Vice Chairperson Diwakar Bhandari ji to close the session for today.
Thank you so much, Rajesh Rao ji. You have run the today webinar very skillfully, and ensure a smooth and engaging experience for everyone. Thank you so much for your excellent contributions. And now let me address vote of thanks officially. Respected Speaker CA Bijay Tiwari, team members, respected Chairperson CA Santosh Khanal, founding Chairperson FCA Lilarat Baral ji, Executive Committee of NPAF, and dear participant. On behalf of Nepali Professional Accountants Foundation, it is my privilege to deliver a vote of thanks for today's webinar on corporate tax filing and compliance essentials. First of all, a big thank you to C. Bijay Tiwari for sharing your valuable time and expertise on the corporate tax filing and compliance, which has truly helped us to understand the subject in a simplified manner. I am confident that all of us have gained knowledge that will be very useful in our professional journey. A special thanks goes to Educational and Research Subcommittee for taking the lead in the planning and coordinating this webinar. Your hard work and commitment made these sessions successful. I want to thank you, Executive Committee, all subcommittee, moderator, and our participant. Your active presence and engagement made this program more interactive and meaningful. Also, let me take this opportunity to share an important update. Membership renewal for NPF has now opened for financial year 2082 and 83. As the coordinator of member and international subcommittee, I would like to sincerely request all existing members to kindly renew their membership and continue contributing to the mission and vision of NPF. At the same time, we warmly welcome new members to join this good cause so that together we can make this NPF bigger, stronger, and more impactful. With that note, we conclude today's session. Let us take forward the learning from this webinar, and we look forward to welcome you again in our upcoming NPF program. At last, dear participant, we look forward to hearing your feedback, suggestion on our today webinar and related to any other NPF past and upcoming program. I would like to request our moderator to open the floor for feedback for next 3 minutes after this my remark. Thank you once again and have a wonderful evening ahead. Thank you. Thank you so much. Take care. Dear moderator, to go for the feedback session.
Thank you, Bijay Bandhaji, for your kind words and closing ceremony. For a feedback session, we have created one and we will share that Google form, feedback form on a chat box. You can all the participants can fill that feedback and you can give us the suggestion what we can improve on our upcoming webinar. There is so many drawback. Yeah, we know that we can improve. There is so many field to be improved and we hope your same participant in upcoming webinar, and there we have so many questions we have asked. Just fill that form genuinely, what you feel, genuinely fill that form so that we can improve our upcoming webinar and we can meet your expectation on coming webinar. Thank you so much for your participation. We are really happy. Still at the end of the session there are 20 participants who are still there with us. I want to thank you all and happy weekend, and see you all on our next webinar. Thank you so much.
Yeah, thank you very much.
For the feedback, you can put your feedback. Thank you.
I'll share the feedback form on a chat box.
Okay. Thank you.
Thank you. Thank you.
And also to also mention, we are on time. Just there were some glitches, but of course there is always room for improvement. Thank you all for being here.
Thank you.
Thank you.
Have a good,
Thank you, everyone.
good night.
Bye.
Thank you. Bye-bye.
Wonderful.
Thank you,
session.
everyone.
Thank you.
Thank you.
Okay, I'll close the recording now.
Yeah.